Today is day 2 of market structure series. We will be going over internal versus external market structure. I don't remember how the outline for this video was before, but I do want to go through it to show a little understanding on, for example, why I was banned from My Funded FX, and it was based on this strategy, trading off the external structure, then trading on the internal structure. So if we can just look at the market here, we see that we're having that uptrend. This is just a little review on it. So we have this uptrend, we have boom, boom, started going higher here, boom, boom, etc., etc. Right, so this is our structure. If we use the circle just to mark that out, this is first off, oh god, let's take off this magnet here, lower low, lower high. This was showing us we're slowing down already. Then essentially here we broke higher, and now we have the bull market playing out. Right now, this that I'm marking out is the external structure that we went through in the previous video, where we're seeing structure on the macro level, on the overall level. What is the trend? Now what I want to go through in this video is what is happening between the lines, what is happening within those areas after we start pushing. You see, because we have this pullback, that's probably another entry. We went here for first entry, then we broke structures, had a pullback for another entry, pullback, another entry, boom. Here, all this is entries. Here we had this pullback, first entry, smaller time frames, we possibly had a break of structure, pullback into another entry, etc., etc. So what we're going to analyze, just for the sake of this video, is the first 3 structures. So we're going to go analyze all this, all that market data that was played out. Let's put that as default. That is horrible. Let's put it white. So we're gonna mark out all that area. If we go on the 1 hour, let's say, here we can see we had that break of structure, pulled back. This is market open, so it wasn't really a nice play, but since we can see here we had a break, right? And if you want, you could take these Fibonacci levels in. Here on that big push, we see that we had a strong down candle that then started pushing up, broke structure again on the smaller time frame. This is the bigger one, this is the smaller one. We broke, came down to it. This is our area of interest, this whole candle here. Let's put this back to magnet. This is called an order block, but basically what the whole idea of the order block is that we had that strong push down to then push market up. That is showing that there was a lot of volume on the opposite side to then push market to the upside. So we see that anywhere in that area is good for buys. So let's say we took it off of the 50% of that Fibonacci. We can see here right away that our TP3 was hit. But if we were to take regular TP1, 1-to-1 risk to reward. So we took it off to 50%, stop loss below that candle, take profit there. Now we see, okay, boom, that was our first entry. Now let's say when we took that entry, we went down into the 15-minute, and now we're looking at structure based off the 15-minute. We see here, this was our entry. We started pushing up, breaking structure. So this is now our area of interest where we want to take our next buys, right? Anywhere within that area, we take buys. So look, this was our first entry. Stop loss, take profit. Let's put that over here. That was our first entry. This isn't saying that every entry that you see we're gonna take it. We're just saying what's happening on the internal structure. So now we see that, we see here now, this is our next structure. We see again, now we're pulling down into the 70.05, 62 area. That shows a lot of discounted areas, which is good. Basically, let's say something is at $1, that's 62% off. Let's say 0.62, that's how we will multiply it, times 0.62. Oh god. Sorry, that's basically how it's gonna be. So instead of buying at $1, we're buying now at 62 cents, or 62 cents off. Sorry, that's what it is, 62 cents off. So what the price really is, now we're buying at 38 cents. And that's the whole idea of the Fibonacci. We're trying to buy discounted areas instead of buying price at market value. So this is that market area that we would next buy. Let's say this one was our first interest and we took it. Stop loss below, take profit. Once you understand and have the patience for this, we see Fibonacci is telling us this is our max TP area. So we can see it took us several hours, but we ended up going there and TP was smacked. Now our next area of interest, as we can see, we broke here, and now we're having kind of this retap of this supported area. Let's put this red, just showing that there's different entries within this range. Stop loss will be here, max take profit. We was even expecting this, but this was what is that, 7:15, 7:30 p.m. Eastern time. We had that strong push to the upside, essentially breaking structure again and taking profit. And that was our full bull run. Now look here on the 4-hour, again we marked up structure on the bigger time frame. All in this is the internal, this is external, this is internal. What's happening on the internal for us to be able to take more entries or to be safer and just forward test our trade. That's how we would take it. Now if we take this area here, this is our next area of interest. Let's say now we started to going up, pushed, broke. This wasn't really a good area to start looking for buys, but that was about our 50% of this whole move. Area of interest, and we took profit back to 1. So we had a nice 1-to-1 and got out. That was our only area in there. Here on the next push, we see, let's see, on our next push is essentially like this. Watch, we're looking at this. Yes, we see our area of interest is this whole candle, but if we want to keep it safer, this is our area of interest for buys. All right, and we tapped into that area. On the swing position, we are trading this, take profit right up here. Nice 1 to 2. And now within that external area, we're gonna go down into, let's say, the 30-minute, 15-minute, whatever you want to see it at, and see structure on that time frame. Let's go on the 15-minute. It's a lot more cleaner. We see here, essentially this was our last low, this was our last high. So this is our area of interest right here. Anywhere within that gap, showing that there was plenty of volume within that area. Also, as people call it, an inverted FEG, which is very significant. A lot of volume within that area and zone. That was our first area of interest. So let's say we took the buys. Stop loss will be here. We can essentially go for same target, right? This would have been horrible, like for brokers and everything. This, we broke from that area, we broke. Now this is our next area of interest. Now we're taking our next buy here, stop loss all the way down there, same target, right? Now we broke. Our next area of interest is within all that, showing volume is pushing. Say on the 30-minute, it probably looks better. Exactly. So here we can see we had that all in there. Volume. And we would take our next buy. Let's see reaction around here. Stop loss. Same target. Now this is all happening within the internal structure. So now we're going up smoothly. Here we have an exponential move to the upside. Now this is our next area of interest. We had a strong down move. Then we had another push up. This one is our order block. If we go on the 1 hour, it's probably cleaner. Exactly. So we see 1 hour candle. That's our area of interest. This is our next buy opportunity. Stop loss below. And we're almost reaching that take profit area. So now we're going here. Our area of interest was here. We pushed up. This was our first from that whole move. So now we're trying to see what's in this area that ended up pushing market that low. Well, we play around with the time frames. That area, we're back within this. We also have this last down candle that ended up pushing market up. Last area of interest, stop loss, take profit. And now look, within that whole external structure, we see here we have 1, 2, 3, 4, 5 entries within that whole swing. And look how now we took it out. We did go up a little, but we essentially pushed down, taking out all those buyers. All those buyers except who? The external person. And now we're pushing market up again. But that's what I've been wanting to post for quite a while. Sorry, it was very delayed. I was on vacation for a while, and then I had to readjust myself into the market again and learn what I had not done for months and come back with a clearer mind. Something happened last month where I'm basically restarting the whole journey. Grateful for it, don't worry. But this was the video on internal versus external structure. So now let's see, if we look at GBP JPY, for example, I am looking at this from the daily standpoint. This was our swing, right? And now we're going up. If we see within this area, we have plenty of entries. I didn't take plenty of them, but I did see plenty of entries. If we see here, we have here the market structure started shifting. So we have a market structure shift. This is bullish break of structure. Our first area of interest would be from that last low that pushed up. So this whole candle right here showed a lot of volume, and they had left this gap right here. So that was our first initial trade for market. And that's entry. Our target is based off daily, so we can honestly go way back up there. That's first entry. Second entry is the one I took. I got out early. That was second entry. This is where I took first entry for me. But if we can see, we had that first entry, boom, market pushed. Second entry here, last low before we pushed up. Second entry. Now what? Market push up. Third entry is where it's all following first of all on that trend line, but third entry now we see is within this area right here, which is where I was looking at. Then we started pushing up little by little. On the smaller time frames, this is where I got in on GBP JPY. It was based off some candle here because we've seen that push showing volume is starting to pull in. Came back in and I took the buy, never came back. But look how from this daily we see here, first entry, just on the swing position. Let's say this is how we are looking at it. There, and our goal is basically tap trend line again. Look how that one trade on the external ended up being one trade, two trades, three trade. This was mine, but fourth trade, I guess. Fifth trade, and we're still pushing. So external, it'll majority of time be just one trade. Internal structures can be plenty based on the structure. Basically, you're following the trend on the internal structure. You're taking one trade on the swing on the external. And that is the whole concept of market structure and how I wanted to introduce internal versus external structure. I didn't know how to bring it, the idea for understanding in the past. So I had to continue back testing and seeing what am I seeing and find out how I can put it into words. So I hope you found value within this video. This was day 2 officially of market structure. and I will see you on day 3. I have to go back to my old video to see what day 3 was about, but I really like how day 2 ended up going. Very informative, and hope this helps you grow in the trading industry, your skills, and your development within the skill. So have a great day, everyone. Have a great night. Safe trading, and continue learning and growing. Now, for homework, sorry, no, last video I put homework. This homework, I would like you to mark out whatever. Just do what you want. Mark out the external structure. Use only the 4-hour to the daily, and then mark out internal structures that is inside that's inside the external structure. You'll do this, we could do the 15-minute to the 1 hour. Utilize all time frames. What looks cleaner? See, like what I was using here is the 1 hour, but let's say I'm taking this trade off of the daily. I'm not gonna go into the 15-minute and try to say, okay, I'm gonna see structure here, because market moves a lot. We're not gonna say this is where I'm going. Still going down. Boom. This is our area of interest. But on the hour it looks so much cleaner. Trust me. On the hour this looks cleaner. Here you would have taken another entry based on that 15-minute time frame, but now you would have been hit out. 1 hour time frame. So what we're doing is mark out external structure on the 4 hour to the daily, and then I want you to mark out all the internal structures within that whole swing. So let's say, for example, let's go back to GBPJPY. Mark out, actually I was marking out, what did I mark out before? AUD, AUD NZD. Mark out all the external in one area that you see on a bull or a bear market. Mark out all the external structures that you see, and then go onto the smaller time frames, the 4 hour, then go onto the smaller time frames again, the 1 hour to the 15-minute, and mark out the internal. See how you can utilize that swing position to enter more times on this pair, and continue learning, continue practicing, back testing until you see it for yourself, and market basically just hands you out trades. So safe trading, everyone. Thank you for joining on this call, on this recording, on this stream, and again, safe trading to everyone. Have a great day. Have a great night.